and a warm welcome to this week's video update. My name's Scott, and this is edition number 12 now of the market updates that Zenergy have conducted. If you are a regular viewer, you may have noticed there was no update last week. That was due to a company-wide strategy day, which Zenergy conducted. So what I'm going to do is talk over prices over the last 2 weeks. There has been quite a significant change in prices since we last did an update. And there has been a couple key events which is important to discuss, which has driven these price changes. So I'll be looking at it over a 2-week period for you just to recapture anything we may have missed. So let's start by looking at the gas wholesale market and see what's happened and what's changed since we last did an update. So here's the graph you will be used to viewing if you are a regular viewer. On the left, you can see the price changes broken down into contract terms, and on the right is the graph itself and the changes. So over the last 2 weeks, we have seen quite a substantial rise in price. Prices have increased anywhere between 34% to 15%, depending on the contract duration you select. What we can see is that consolidation period in the prices between kind of mid-March to up until mid-June, where prices have kind of traded sideways, has now ended. Prices have now kind of broken into 3 or 4 month high periods. The only time prices have really been higher was a select few days in March, where we're at the peak kind of energy crisis fear in the market. So what's caused this to dramatically rise up? I do have slides a little bit later that come onto that, but the one to make note of really is the major fire and outage at the LNG terminal over in the USA. So this Freeport terminal located in Texas suffered an outage, a major explosion. It was reported to be out of action for around 3 weeks, which caused the first initial spike. That was soon after revised to be a 90-day outage. So it jumped from a 21-day period to a 90-day period and caused the markets to dramatically rise. So to put into context, you may be wondering why Freeport over in the USA has caused your UK market to increase so much. That is because we are so reliant now on LNG imports, more so than ever, given we're trying to diversify away from Russian sourced energy. So this impact not only impacted the UK market, but all European markets and some Asian markets as well. This Freeport does account for around 20% of the USA's LNG processing, so it is definitely significant in size, and we can expect a reduction in shipments now of LNG cargoes heading Europe's way. So that's kind of where we're at. That's caused that dramatic spike. I will come on to a few other factors which have driven prices up further following off the back of that. Let's just look at power prices now. So again, the trend is very much similar. We can see power prices have increased anywhere between 24% and 11%. So not as dramatic as gas market, but still significant. And you can see again that trend in the graph is identical in that prices have broken into 4-month high now in the price range. So let's move on to what has actually been pushing up prices. So the one factor I don't cover here, because it was 2 weeks ago, was the LNG fire terminal, but that is the main one to take note of. But I'm just going to talk about what actually happened last week. So firstly, and probably the second most significant impact, was a reduction in gas flows through Nord Stream 1. So Nord Stream 1 is expected to go through some maintenance around mid-July, where it's going to be shut off completely, but it was not expected to reduce this by this amount leading up to that. So its capacity is now only running at around 40%. This has been really bullish on prices. It has caused Germany to come onto a second stage emergency plan, which I'll come on to. But it has just put the fear in the markets once more into question. It's put security of supply of Europe into question. And there are real genuine fears that this could reduce further, or there are fears that the maintenance that is due to take place will be extended or delayed in any way. So that has put a lot of bullish pressure on prices right now. Leading on to that, and as I mentioned, was Germany triggered its stage 2 emergency gas plan. So it has a 3-stage kind of process, and it's at stage 2 now. At this stage, Germany can pass on the full costs of gas prices to their customers, that is domestic customers as well. And the reason being is at this stage, it's trying to encourage people to reduce their usage. So if they are paying the full cost of that price, it will entice them to do everything they can to reduce their usage. At the moment, I can't see any reports of any German suppliers doing this, but it could potentially be only a matter of time until they start to do so, particularly if the situation worsens. So that again caused a lot of fear, a lot of bullish drivers in the market as Germany announced that stage 2 gas plan. One factor which has been bearish, which really has been dwarfed by the top two, but is important to note, is oil has had a decline in value over the last week. It has lost around $10 of value a barrel compared to where it was a week or two ago. So that's decreased from $123 a barrel to around $113. This has all been really driven by recession fears. So recessions and a slowing down economy is likely to lead to a reduction in oil consumption. And it has been very bearish on oil prices. It's the one kind of commodity which has gone again against the rest of the energy market here and has had quite a poor couple of weeks downtrending. It's important to note though that even though it's seen a pullback, oil prices are well above their historic average. It's trading still well over $100 a barrel. Typically oil barrels tend to go for around anywhere between $60 and $80. So that's well above its historic average there. So that's a quick recap over last week and what's been driving prices mainly upwards. Let's just look at what's to be expected this week. So we've got 3 things to talk through here. First is the G7 meeting this week. This is going to be very important. Markets are paying big attention to this. Reason being is energy is likely to be number 1 on the agenda for the G7 nations. Now, there's a whole range of things they could discuss. There is speculation growing that the Iranian nuclear deal will be high on that list. There's also speculation that they'll be discussing a price cap on Russian oil. So a number of these policies could be announced this week or next, depending how discussions go. So that's one to pay attention to. And again, this could be bullish or bearish on prices, depending what the policy is and how they'll implement it. Next is we have seen some impact of Norwegian gas flows impacted by outages. So it's not something that should not be expected. It's a regular occurrence really, but we have seen the Ormen outage take around 13 MCM offline. Really that's minor, but it has just put some short-term pressure or near-term pressure on gas supply right now. At the moment, we're able to source elsewhere and increase demand, or increase supply elsewhere, I should say. So that's just something to note, but it does put a little bit of small pressure on the near-term supply picture. Next is the wind levels are due to change really quite rapidly over the last 2 weeks coming forward. So they should peak midweek around Thursday and producing near 12 gigawatts of energy, before reducing to around 2 gigawatts of energy the following day. So that's going to create a really wide spread. You can see a graph on the right here which kind of displays that much better. So we can see around the 29th of June, you see wind levels peak really around 11 or 12 gig, and then we see it really drop down. After then, it's expected to be at around normal levels for certainly the first half of July. That will aid the supply picture short term during that period where wind levels are very low. That would potentially be an issue. So we'll see what that does in terms of energy prices, but wind levels are expected to be quite wide ranging over the next few days. And that is it in terms of quick updates. As always, if you haven't looked at our website, we do have a dedicated Market Watch website that uploads daily reports and monthly reports. The latest monthly report has just been added, so you can look at that. And as always, we have a Market Watch live team, which are available to chat to between 10 and 12, Monday to Friday, if you do have any questions. So thank you for watching. I hope you have taken something away, and look forward to talking to you again in the next video update. Thank you.